So we're going to start in, everybody. My name is Zach Schulman. I'm the Director of Entrepreneurship at Cornell. I know a whole bunch of you, but in case you don't know, I did go to Cornell. I just told Amy I graduated in 1987 and then from 1990 from the law school. So Amy and I had that in common. We both went to law school, and we'll talk about that a little bit at the beginning.
Recovering lawyers.
That's right. That's right.
Jump from one tough profession to another.
Yeah. A bunch of people submitted questions in advance, which was fabulous. I've grouped questions into three categories that I've created, A, B, and C, to be overly creative. If you have more questions, put them in the chat box, and Amanda will be monitoring that, and she will try to weave your questions in. With so many participants, obviously we won't get to them all. I want to thank CEN, the Cornell Entrepreneur Network, for being a co-host and partner with Entrepreneurship at Cornell for this event. This is the third of our webinar series. We'll have another one in about a month. We don't know the speaker yet, but we'll pick that person soon. And today we are delighted to have Amy Banse with us. She is the head of Comcast Ventures and has had a long career at Comcast. It's worth telling you how I got introduced to Amy, although we do have a very good connection in Scott Belsky, who a lot of you know. But Amy's son is on the squash team and at Cornell, and one of his teammates, Max, is a student who is involved with some entrepreneurial stuff at Cornell, so Max knows me. And he literally emailed me and said, oh, if you need a good speaker for anything, my teammate's mom would be awesome. And I said, that's great, Max. And he literally introduced me to Amy. And that was just about a month ago, I think. It wasn't much longer than that. And now here she is. So I'm going to jump in, Amy. And the first set of questions will be kind of on the personal front for you, just to kind of lay some groundwork for everybody else. So you spent almost your entire career at Comcast, which I think is quite extraordinary and unusual, by the way. But tell us before that, like, why did you go to law school? And did you ever practice? And has law school or practice help you be a better VC?
I'll answer that question, but before I do, I love being introduced as somebody's mom, because you know, at the end of the day, if you're a working mother, you really are a mom first, and everything else comes after. So. I think it's totally appropriate to introduce me as Alex's mom. Yeah. Go Big Red. Alex's
Absolutely.
mom.
And by the way, I consider myself a dad before anything else as well. I mean,
you have no choice. No choice.
No choice.
You want to do it right, you have no choice. Why did I go to law school? If I'm honest with you, Zach, I went to law school because my father was a lawyer. He was general counsel at Merck for many years. My uncle was a lawyer. My grandfather was a lawyer. And I think it's probably true of many 20-somethings who, you know, get spat out of college and are trying to figure out what to do next. And they often do, you know, what they know. And in my case, you know, I knew a lot about law school and lawyers and the practice of law. You know, what did I get out of it? I think law school, at the end of the day, I admit I didn't much like the practice of law, which is why I jumped to operations as soon as I had the opportunity. But I do think law school was worth it. I think law school teaches you to think in a very organized and linear fashion. It trains you to break down complicated situations and sort of build them back up in a strategic order. And so I do think it's worth, for me, looking back, you know, at what I learned and how I used it in my career. I think the most important thing I got out of law school was really how to think rationally through complicated situations. So, you know, I benefited in that way. I do think I should have paired it with an MBA. You know, I did have some catching, once I jumped to operations, and to management, I definitely had some catching up to do. In hindsight, I probably, given where I ended up, I wish I had had both degrees.
Yeah. Why don't you just walk us through a quick history of your time at Comcast? I mean, 30 years is a long time for one company. Most people would probably switch out or get bored or something, but you've completely always been able to reinvent what you're doing there.
Yeah.
And it'd be great for us to understand a little bit more about how it all came about. And now you're leading a huge venture arm there. So it'd be great to hear that.
Okay, this may take a while, so sit back and hang in there. I guess the first question is, how did I get to Comcast? So I did practice law for 4 years at a law firm in Philadelphia. Thinking back, I think, Zach, any successful career is sort of made up one part, one part determination and grit, right? One part knowing what you're good at, figuring out early, where your talents lied and not trying to be something you're not. And a healthy part, at least in my case, of luck. And to some degree, I ended up at Comcast from the law firm I was working at because of luck. I knew early on that I didn't want to stay at a law firm. It's a tough way to make a living, frankly, or I found it to be a tough way to make a living. It occurred to me sort of 3 years in that you get paid by the hour, and you could have a brilliant thought one moment and a totally mundane thought the next, and you're going to get paid the same for it. So I knew pretty early on that I wanted to leave private practice and join a company. And I was helped by the fact that my father, was at Merck. So I knew what corporate law was all about. But I also knew I didn't want to join a big company. I wanted a small company, growing fast, led by a visionary founder. And I was just lucky to find that in Comcast, a Philadelphia-based company. I was practicing law in Philadelphia. Comcast just happened to check all those boxes, and it gave me a chance to, learn at the foot of a brilliant man, Ralph Roberts, who was the founder of Comcast, and his son, Brian, who's the current CEO. It gave me a chance to learn in a company that was growing fast. So I also got probably outsized responsibility early on.
Yeah.
And for me, that was sort of the perfect combination of the perfect combination for the start of a career, right? Small company, growing fast, really good management team, visionary founder. Because they were growing so fast and short of hands, I got, the chance to do things that, most 30-year-olds don't get the chance to do. So that was my beginning at Comcast. I was recruited in as the, second lawyer at the company. Then about sort of 2 or 3 years in, I had helped acquire, we were a cable company first, but then we moved into building cable networks. So, the idea was we had the pipes, let's also invest into and acquire the content that, at the time, this was the late 80s and early 90s, the content that was sort of growing on top of the pipes, the content ecosystem that was growing on top of the pipes. And we started to invest in, the entertainment channel, a bunch of sports networks, the golf channel. Again, because it was a small company running fast and growing fast, we, invested in and acquired majority control of some of these networks. One day, the CEO was walking by my office. I said, okay, now we're the managing, partner of this portfolio of networks, who's going to manage it? I was still a lawyer at the time. And he looked at me and he said, you. And I was like, great. Here's my opportunity, to move out of law.
And how big was the company then? Did you remember how big the company was then?
I don't remember how big the company was then, but it had only gone public a little bit, a couple years before. So it was still quite small. So I spent the first couple years of my career was as a lawyer. This probably the next 8 to 10 was managing and building a cable network portfolio. After the next 10 was started around 2000, where we recognized that the next ecosystem that to be built on top of our pipes was the internet. And so I was charged with building a team that subsequently developed our cross-platform and digital strategies. And then in 2011, we bought NBC, and NBC had a venture fund. We had a venture fund that was actually launched by our founding CFO back in 1999. We decided to put those two funds together, and they asked me to run it. And that's what the fourth piece of my career at Comcast. So long story short, Zach, I think the answer to your question, why have I been there for 30 years? I think that's the question you're asking me.
Yeah, it was originally.
I just lucked out landing early at a company that has had an amazing growth curve over the last 30 years. And I've had the opportunity to totally change up my job, every 8 to 10 years.
So it's fair to say you haven't had a job interview in 30 years.
I haven't had a job interview in 30 years,
right.
which is really kind of nice. Somebody called me not only have I not had a job, I've really had the opportunity to build new businesses sort of within the safety of, a large company. And somebody called me a couple of years ago, somebody called me an intrapreneur. And I like that, that label works for me.
Yeah.
And I think it's the real answer to why I've been there for so long.
Well, it's a great answer, and it makes a ton of sense as well. It's almost like you've had, different employers over the past 30 years.
I've had different jobs and different employers over the last 30 years. There's no question.
So somebody asked this question in advance. So I want to ask it now, and it's part of the chat box already. But if you had to put 4 people on Mount Rushmore as your people that you aspire to, who would the 4 be? And let's keep politics out of it. So
okay, I was going to say, should we keep it to corporate America?
Yeah, keep it corporate America.
Okay, so the first, of course, is Ralph, who was the founder of Comcast and my early mentor. If I, put Ralph up there, I have to put Brian up there, who's the current CEO, his son and a good friend. Who else would I put up there? I'm on the board of Adobe and I'm on the board of Clorox, so I would feel bad, both of whom are excellent CEOs, Benno Dore of Clorox and Shantanu of Adobe, and so they would go up there.
Well, that's actually 4.
I know that's 4.
That's 4. I don't know if you need any more than that. It's okay. It's okay. Let's move forward a bit and go into corporate venture capital. So just to level the playing field, in case people don't know the difference between corporate VC and normal VC, can you just explain in simple terms what corporate VC is and how it operates at Comcast?
Yeah, it's a really good question. It's a question I actually, Zach, asks myself all the time. So as I mentioned earlier, we were an early, we call them CVCs, corporate venture capital. We were an early CVC. It was founded by one of our early CFOs, Julian Brodsky's, back in 1999. It was founded for financial reasons. He was very much looking to invest in and take advantage of the early internet, Web 1.0, the early internet wave. Our fund hung in there through the early 2000s. And then, as I mentioned, we in 2011 we combined funds and really sort of, my team grew it from there. So we became much larger starting in 2011, which happens to coincide with a real explosion in CVCs.
Yep.
So I think when I started, Zach, there may have been 100 corporate venture arms out there. Somebody told me recently, today there are 1,000, right? So there's been a huge growth in CVCs over the last 10 years. And I think the reason is simple. I think, corporations see venture capital arms as one way to keep pace with change. The Fortune 100, the Fortune 500 finds itself, particularly now, in a time of tremendous change and transformation.
Absolutely.
Having a venture arm with a team sort of on the ground, identifying early signals, identifying interesting trends early, identify interesting founders and companies early is one way to keep pace.
Which makes a ton of sense. Can you talk a little bit about Comcast's investment strategy? Who they, what types of company, stage of company?
Yep. Okay, so bear with me. So of those 1,000 CVCs, there really is a spectrum of how different corporate funds approach venture capital. On the one hand, you've got what are more, are mostly, BD, business development funds, which are, purely strategic. They're looking to invest in companies that are right in their wheelhouse and can, if not day one, day 30, support the parent, right? And the parent's initiatives. On the other end of the spectrum, you have, and Google Ventures is a Sapphire is an example of this. You've got funds that are all financial, right? Their mission, like any other venture fund, any other institutional fund, their mission is to invest in companies that will return, will realize venture returns and make money that way. And then in the middle, you've got, everybody else. I would say that Comcast Ventures is more towards that second end of the spectrum, in that we have always believed in the discipline of financial investing, right? We have always believed that the first box we want to check when we invest in a company is this a company with a team, a product, a market that will realize venture funds? We think that keeps us disciplined. But having said that, we like to say we turn strategic on its head, and we are looking for companies where we can leverage who we are, which happens to be a big company, Comcast. We can leverage who we are to help our portfolio companies grow, okay? And then the final thing I'll say, Zach, is, because we're such a big company with such a broad platform, we're broadband, we're cable networks, we're, a film studio, we're theme parks, we've got, Sky internationally. We have the luxury to invest across a broad spectrum of categories. So, we invest in cybersecurity, we invest in quantum computing, we invest in smart cities, but we also invest in B2C brands, and media. And why? Because we are so big, it's a rare company that we don't have some connection to.
Right. So Amy, do you actually, like a normal VC, get carried interest? Like, is there an incentive built in?
Yeah. That's a really good question. I very much believe, yes, the answer is at Comcast Ventures, we do get carry. And I'm a big believer that you don't do corporate venture unless you're willing to recruit and retain what I call real investors.
Yep.
And real investors want to be compensated like real investors. So we try to match to the greatest extent possible the kind of compensation that our team would realize, would be offered and realized, at a top tier venture fund.
Okay, great. And for those on the webinar that don't know what carried interest is, I should have explained that. So if a firm makes an investment in a company and that investment turns profitable and returns back to the firm more than the investment amount, after a certain hurdle is set, like the fund has to be returned, for example, for a traditional VC, the general partners, so people like Amy and her team, would receive a share of the profit.
Yeah.
Okay, and that's how that's how some VCs get incredibly wealthy, and that's really what they're working for, is that profit share. And that profit share is called carried interest. And at most funds, it's about 20% of the overall profit to be split among the people who are actually running the fund. Let's switch gears a little bit. So
the only thing I'll add to that is you have to be really good to get really wealthy to make it really work.
Yeah.
Right?
It's a very...
Venture is not easy. We were chatting about that before this. This is not an easy job.
No, in fact...
I'll say, just for those who aren't familiar, we look at 2,000 companies a year. We probably end up investing in, maybe 15. And, typically, if we're lucky, one or two of those companies makes the fund. So it's a fun, it's a fascinating, it's a fast-paced and interesting profession, but it's not easy. And, there's a bit of luck that comes in realizing the kinds of returns that you were talking about.
Right. Is Comcast your only investor in the fund?
They're our sole LP. Yeah.
Okay. Yeah, that was actually a question that just popped up.
Yeah.
And that's true for a lot of corporate VC, but not all.
That's true.
Just for folks on that care to know. Do you have a interest or purpose to fund companies led by women, led by minorities? How much of your fund gets allocated that way, if any? I'm curious to know how Comcast views that.
Yeah, really good question, especially right now, in the context of the broader conversation around racial equality that is going down in the country. So let me start by saying that I actually think venture should be a very powerful tool in addressing some of both the gender inequality and the race inequality in this country. And why do I say that? My experience over 30 years is that it's only human nature for people to recruit, hire, promote, mentor people who look like them, consciously or unconsciously, look like them from the background, from the schools they go to, look like them physically, right? And it's something that, we all need to be aware of and try to correct. But two, I think that if you are in venture and you underwrite women or you underwrite people of color, and those founders build big businesses, they're more than likely to basically pull people who are like them, up through their ranks. And it's one way to look. I mean, political and social power in this country is based in large part in economic power. And, if you give women and if you give Black and brown people the ability to build big companies, and in the process pull other people who look like them up through the ranks of their big companies, I do think it's there could be a really compelling, powerful outcome there, which is one reason why I believe VCs, have it in their power to play a real role in correcting some of those imbalances.
Yep. And tell us, if you can, some specifics about Comcast portfolio. Some of your,
yeah.
I know that we talked offline about this.
Yeah, we have we've had a fund, the Catalyst Fund, for about 8 years, which is focused on underwriting women and people of color. And we've had success there. I think we could do more with it. Last couple of weeks, Comcast, Brian, our CEO, has come out with a major commitment to look at our own practices and try to leverage who we are to make a difference. And I think this fund is one weapon or tool we have to use, and we probably should make more of it. Interestingly enough, to my prior point that, people tend to invest in, recruit, hire people who look like them. We've got a couple women on our investment team, including myself. And without really trying, Zach, we've got 120 companies in our portfolio, and we way over index on the percentage of those companies that have at least one female founder. So, we're close to, I think the number is 27, 28% of our companies have at least one female founder. That's not good enough. We need to keep working. But I think it's evidence of my theory that, if female VCs and Black and brown VCs underrate female founders and Black and brown founders, you're going to build companies that lift everybody up. And that's a good thing.
Great. Somebody asked this question, so I'm gonna put it out there.
I know these questions are coming in fast and furiously, and they're distracting.
Yeah, that's
but
okay.
I'll let you manage the question.
Yeah, well, Amanda can too, but and a bunch of them were submitted in advance. So at a basic level, what do you look for in a company and the founders?
Yeah. Comcast Ventures, we invest early, which is not true of all CVCs.
I mean, is that pre-revenue?
No, pre-revenue. Yeah, we invest we invest typically at seed and, Series A. Sometimes we'll do Series B, but we rarely do past that. Why? Because as I touched on before, we think our superpower, everybody's talking about their superpower these days, but we think our superpower is our ability to leverage who we are to help young companies grow. Whether or not it's, on the B2C side through sort of marketing and advertising, on the, B2B side, by helping our companies, our B2B companies, develop partnerships with Comcast.
Yeah.
But we think our superpower, our differentiator is, our ability to support healthy growth among young companies. And so we invest early. We like to get a significant chunk of equity.
Yep.
8, 10, 12%, and we like to sit on the board.
Okay. What are the three things that you immediately turn you off about a founder? I'll tackle the question that way. I'll say, okay, what things don't you like? Apologize for my dog barking in the background, everybody.
That's okay.
I hope you can't hear it.
Okay. I may turn that question around on you and tell you what I do like in
That's
a founder.
fine, but I'm still going to ask what you don't like.
But you're absolutely right, Zach. At that stage, you're particularly at seed, pre-revenue, you're investing in an idea, you're investing in a vision, and so so that really means you're investing in the founder and the founding team, and you're looking for somebody who has an extraordinary insight, who has identified a need before the market or the world has identified it. Mm-hmm. So you start with an extraordinary insight, but then you have to pair it with somebody who's got the charisma, I guess, to sell that vision and sell it hard to first investors, then the team that they're trying to recruit to sort of build and execute on that vision, and finally to customers. So you really, any good VC actually needs to have good people sense, right? You need to be able to identify that extraordinary founder, that, one of a kind, or few of a kind. You need to be able to not only identify that, that spark, that unique spark, but you need to be able to develop a rapport with that founder, that that you can work with them, right? And that our resources are limited, our dollars are limited, the support that we can provide a company, there's only so much support that we can provide a company. You want to make sure that you can work with those early founders, that you can trust those early founders.
Wait,
so
but are there some red flags? Are there like me as a VC, if I'm sitting in a meeting and somebody just comes across as incredibly arrogant, or they think they know everything, I just can't imagine working with them for 10 years.
I think that's important. Zach, I think that's important. You just put your finger on it. If somebody's bullshitting you, that's a red flag, right? If somebody doesn't understand their market or their product, that's a red flag, right? Yeah. If they're, obnoxious and arrogant, that's a red flag. I think you articulated better than I did, but this is a marriage. When you invest early, it's akin to a marriage in that you are in it, and it's a rare investment that doesn't have more bad days than good, right? So you are in it, you are a partner, and you are in it, and you are in it for the long haul. And you need to want to not only be able to, but you need to want to work with that founder.
Right. Do you find that Comcast is often competing with other VCs for a deal?
All the time.
Yeah. And talk a little bit about that, because I'm interested to know, why choose Comcast?
That's a really good question. I think actually corporate venture is coming into its own right now. For a long time, even before I joined the fund, there was this notion that corporate venture was second class in that they didn't invest early. They were sort of later stage strategic. You wanted them to come in when you had some momentum and you needed some strategic support, right? Mm-hmm. I think that's changing. We invest early. We're seeing more CVCs invest early. And I think we're getting better at it. I think we're getting more sophisticated at it. And I think in a world where there's enormous amount of liquidity, there are lots of dollars out there right now. If you look at the chart of dollars, venture dollars invested over the last 10 years, it's just gone up and up and up every year until maybe this year. We'll see what this year brings. And I think we can compete because a good founder with an exciting idea often has a choice of investors. And, you know, we're increasingly able to state and to prove that we bring more to the table than just money. And, you know, if you're a young founder with a young company, money is nice, but the kinds of, you know, the kind of power that we bring in addition to money, the kind of support, that's a better word, that we bring in addition to money is increasingly attractive.
Yeah, you know, and this question's come up also. Do you get approached by startups looking for investment who actually come to the pitch and say, you know, you're going to want to buy us in 5 years?
Yes, we do get those, but not so much because, and that goes back to your earlier question. We're not necessarily looking for people who, you know, want to sell to us in 5 years.
Right.
You know, we're looking for people who want to build big billion-dollar businesses. And if somebody comes to me and says, you're going to want to buy us in 5 years, you know, it may not be true in every instance. If there's something that's like right in our wheelhouse and something that could be, you know, a new business model for us or a new revenue stream for us, I'm not necessarily going to write that guy or woman off. But typically I'm looking for somebody who doesn't want to sell in 5 years. Typically I'm looking for somebody who, you know, thinks that in 7 years they can go public for billions of dollars.
Yep, absolutely. Somebody else asked, what are the basic metrics a company needs to have a realistic chance of being invested in by Comcast? And I'm going to give my answer first. I'm going to say that there is no set of basic metrics because the process is highly subjective and it really depends on the stage of the company. But I guess, I mean, it's fair to ask, I mean, is there a basic core set of metrics that Comcast either publishes or lets people know of in meetings that they need to meet to be considered?
Yeah, I think I would agree with your answer, again, because we are investing early. I think, you know, metrics come into play, you know, your revenue, your multiple, your valuation, that comes into play when, you know, if we're looking at a, you know, a series B or C investment, which we do, yeah. But increasingly, you know, we're investing early. And the principal metric is, as I said before, the team and the vision. You know, do you have the, this is, you know, this is not original to me, but you often hear in venture, it's the team, it's the product, and it's the product market fit. And just like all VCs, you know, that's really what we're looking for at the early stage. You know, we're also looking, you know, can we get in at a valuation? Can we get a nice chunk of the company at a valuation that makes sense to us? And that's important, as I said before, because we do have this pot, this pool of services and products that we offer our portfolio companies. And, you know, we're not going to do that. We're not going to make it available to anybody. We're going to make it available to the companies that, you know, we have a true partnership with.
Right.
So, you know, so at our stage, we're looking at founder, we're looking at product, we're looking at product market fit, and we're definitely looking at valuation and whether or not we can get in, you know, a sizable chunk of equity at a valuation that makes sense and, you know, justifies the kind of partnership and contribution that we want to play in any growing company.
Right. So let me ask a question about valuations, because I've had this discussion with so many people. Um, your typical investment size is about what for a first investment?
$1 to $10 million.
Okay, well, so let's just say it was five for this particular deal. I mean, would that mean that the valuation would need to be set? I mean, it's going to have to come in at a range that allows you to own your 15%.
No, I mean, not quite 15%. You know,
Okay.
we want to see high single digits. You know, we like, 10% is always a nice, particularly early, is always a nice place to
Mhm.
land.
Okay.
So you're right. We like to see at the early stage, valuations that come in at 10, 12, no more than 15 on the post,
Right.
at the earliest stages.
Right.
We will write larger checks, at larger valuations, but, and we've changed over the 10 years, Zach, that I've been a part of this. It's rare for us today to try to sort of muscle in for a slice of the equity at $100 million valuation.
Right. Right.
That's just not where we play. Some CVCs do play there. So Google will do that and Salesforce will do that. But we've decided that our sweet spot is early.
Well, it sounds like you act like a very normal VC in the sense that, your ownership is a main driver of valuation. And it's really important for entrepreneurs to know that.
Yeah.
Don't ask Comcast Ventures or any other early stage fund for a $2 million investment so they can own 1% of your company. It's just not going to happen.
It's definitely not going to happen. And in our part, it's not going to happen because, as I said, we've got, I keep talking about this product or pools of services that we have. It's called Forecast Labs, actually, and you can go online and take a look. But, we've developed a suite of services that are designed to help young companies grow, right? And, we believe that, that's part of the value that we bring, and we want to be recognized for that value.
Yep.
i.e., give us a nice slug early, in return for the value we bring to the table.
Absolutely. Amanda, you want to jump in?
Yes, so let me jump in because we've had a ton of questions come in. One that I've seen repeatedly is they want to know, how can they make a pitch to Comcast? I don't know if there's a short answer to that, a quick short answer, but then I'll follow it up with another one.
There's a quick short answer. If they've got something they want to pitch, they should email me. I can't promise that I'll answer all the emails, but I'll try to make sure that somebody on my team does. What part of what we do, Amanda, is, we spend a lot of time talking to a lot of people. And, that's part of understanding, the entrepreneurial ecosystem. So if anybody has a pitch, unless it's like completely out of our scope, we're happy to have at least somebody read the pitch.
Yeah, it's funny. Let me just jump in because somebody else asked a question. Have you ever invested in a company where there wasn't a personal introduction to somebody on your team? So like a cold call submission. Has anybody ever over the transom?
I'm going to be honest with you, Zach. Cold calls are hard.
Yeah.
Right. And there's no question that, a warm intro makes a difference. I'm just going to be totally honest with you.
Yeah, absolutely.
It's not to say that, typically the cold call works the other way around, which is somebody on our team has identified a company that's in an interesting space and growing quickly. And we reach out to them, right? So I'll just be honest, that the successful cold call is usually from us to the company.
Yeah, well, if you think about it, if you're looking at 2,000 deals a year and making 15 investments, I mean, the percentage is tiny.
Percentage is tiny, but it's part, I don't think it's different from other, top tier funds. I think that, your job as a VC is to meet as many companies and as many founders as possible and, sort of find the needle in the haystack, sift
Yeah.
through them all and find the needle in the haystack.
Yeah. And is your email on the Comcast Ventures website?
I don't know. I think it is on the Comcast Ventures website.
Okay.
I'm happy to give it to you. It's amybanse@comcast.com. So anybody can email me. I don't promise I'll respond to all of them, but I will definitely have somebody take a look at all of them.
Good. Amanda, did you have something else?
Yeah, we have several more. We actually had a few people comment on the Intrapreneurship that you mentioned earlier, and they're looking for advice. Several women actually are looking to go down that path. One post-MBA, one wondering if they should transition into law school. Any advice you'd give on that direction?
Yeah. My advice there is land at the right company. I think Intrapreneurship is easiest and most satisfying if you end up at a small company that's growing fast, right? It's just, if a small company that's growing fast is looking for people to fill holes, right? You see a hole and you jump in it. And 9 times out of 10, if you fill that hole successfully, a hole being something that the company needs, you'll be given more to do. I think that's probably the easiest path to entrepreneurship. That's not to say that if you could also join a larger company that, if you look at their history, they're strategic, they're acquisitive, they're constantly pushing the boundaries to grow and identify new lines of businesses and new products. Google is like that. Facebook is like that. All the big tech companies are like that. And so that's certainly the other way. Comcast is like that. That's certainly the other way to go. But I think if you're looking to be an entrepreneur and you're looking to create businesses and products within an existing company, you've got to make sure that they, have a history of embracing that kind of initiative.
Great. And real quick before we run out of time, because I'm just keeping an eye on the clock, we've had several questions about this new time period that we're in with COVID. How has that changed sourcing deals for you guys? What do you see for the future in terms of investing? Somebody even asked if you're still focusing on geographic hubs like San Francisco or New York. Maybe you could talk to that a little bit more.
Yeah, it's certainly an interesting time. Zach and I talked earlier about the fact that, venture is fun, exciting, but a tough business. And you see as many losses as you see more losses than you see wins. And every day brings its challenges. I would say that that's especially true right now. And Amanda, I was talking to my partners about this just on Monday. I think I'm sort of breaking COVID down into 3 or 4 phases. So the first was back in March where everybody was just scrambling to get their people into their homes and figure out how to run their businesses from their homes. The second was, we call that the sort of fog of war phrase. I'm borrowing from our Comcast CFO, but there was just scrambling to get people safe. The second phase was then we spent a lot of time, and I'm sure this is true of all funds, contacting every single one of our companies, figuring out who had enough runway, enough liquidity to get through the next 24 months, who didn't, if they didn't, how are we going to shore them up? I would say that took us through April. Just an aside, what's interesting, Zach and I were talking about this earlier, of our 120 companies, it's interesting, we've had a handful that have been really hurt by COVID. We have a handful that actually is experiencing a COVID bump, right? And the vast majority are, stumbling are managing, right? Not even stumbling, but managing. So that's, that's just an interesting observation. But anyway, after the second phase, which was probably through April, we entered the third phase, which is, okay, can we pick up investing during this time frame where we can't, meet with investors? I mean, meet with founders. We've talked a lot on this call about how important it is to find a founder that you admire, connect with, develop a rapport with. And we spent a lot of May talking about, was that possible over Zoom, right? Can you do that digitally?
I mean, in a way, though, it does democratize things.
It does democratize
in a way.
So we've answered that question, and we've actually started. So that would be the fourth phase. Is we've made 2 or 3 investments in companies and founders that we've never met in person. And we're re-entering slowly. And I would say there's a much heightened scrutiny on our references. So we're doing, probably 2 or 3 times the referencing that we would have done pre-COVID if we had had the opportunity to meet these people in person. But we are back to writing checks. And we think that, COVID is going to present, we haven't seen a lot of drop in valuations, I will say, which I can't quite get my head around. I do think there should be a correction there. But we also see, opportunities. People's lives will change, have changed, and, will change permanently. And we think that there are investment opportunities in that change.
Hey, can I ask another question that a bunch of people are curious about? And I know we only have a couple minutes left here. Any advice for people who want to get into venture capital? And I'm going to preface this by saying, when somebody asks me the question, I always joke and say, yeah, the best way to get into venture capital is to kill one of us so that there's room, because there's just so few VCs. It's like a really, really hard career to get into. There's only 5,000 or 6,000 warm body VCs people. So how do you get into VC? I mean, I'm an accidental VC. You're an accidental VC in a way. I mean, you didn't expect, or you weren't searching for this.
True. I'm very much an accidental VC.
Yeah.
It's a really good question. It's hard to get into venture. An MBA helps, business degree helps. And I think there are 2 paths into venture. There's the path right out of business school, where you say, this is my lifelong passion to be a VC, and you get into a fund early. It takes a long time to train a good VC. It takes 5-10 years, before you get really good at both picking companies and working with those companies once you invest in them, learning how to be a good board member. And so that's one way to just say, this is my, lifelong dream. This is my career path, and to jump into venture right out of business school.
Yeah, but getting that job, I mean, there's very few jobs.
Yeah, it is tough. There are a few jobs, and it's tough. I think, frankly, we talked about this. It's probably easier right now for women and people of color, because I think we're not the only ones to sort of wake up to the fact that society will benefit with more women and Black and brown people in venture. So there may be a window of opportunity there. The other way, of course, is to run a company, found a company, right? Because so much of venture is your network. And if you are a successful founder or serial entrepreneur, and you've done it a couple of times and you know how it works, you're going to be attractive to any fund. They're going to want to, tap into your network, and they're going to want to tap into your, your expertise and your experience.
So how about this? This might be the final question. It's 12:59 on my clock. I know you have a busy afternoon of fun VCing. If you had to recommend one book for people who want to learn about VC or the business world, what would it be?
Well, Ray Dalio's book is really good. I will admit to that. If any of my family members are on, they're going to laugh because I'm going to recommend a book. Given where we are in this country right now, I'm going to recommend a book that has nothing to do with venture. But I think everybody should read Jill Lepore's These Truths. If you want to understand what's going on in this country right now. So that's the recommendation that if you don't mind, Zach, I want to put out.
Of course I don't mind. It's perfect. It's perfect. Amanda, are we out of time?
We're right at 1 o'clock. So yeah, I think we should wrap it up. And thank you so much, Amy, for your time today. We really appreciate it.
Well, it was fun. It went very fast, and happy to have done it. Thanks for inviting me.
Thank you so much.
And thank you everyone for tuning in. And just a reminder, we did record it, and we'll share the link as soon as it's ready. And have a great afternoon, everybody.
Thank you. Be safe.
Thank
people.
you.
Take care.
Bye-bye. Thanks, Amy.
Bye-bye.
Bye-bye.